Hello, property navigators. Today we're discussing Cairns, one of far north Queensland's most promising regional markets where you can still buy a high-performing property in the 600 to 650k price bracket. This is the most detailed analysis you'll find anywhere on YouTube or the web. I need you guys to lock in for the time period here because this took me days of research just to get it out there for you. Don't have TikTok brain. Watch the whole thing, especially if you're considering investing in the region. It's going to give you everything you need to know. Let's go. Situated about 1,700 kilometres north of Brisbane, roughly a 2-hour flight, Cairns is a thriving city and is the primary service centre for the entire far north Queensland region. The city boasts a prime coastal position on Queensland's tropical eastern seaboard, providing direct access to the iconic Great Barrier Reef, pristine beaches and the World Heritage-listed wet tropics rainforest. Cairns benefits from extensive transport infrastructure connecting it to local, national and international markets. The Bruce Highway links to major Queensland centres, while the Captain Cook Highway provides scenic access to the region's northern beaches and communities. Cairns Airport offers frequent domestic services to major Australian and international cities. The port accommodates commercial shipping and exporting, maritime industries, and is among the busiest super yacht and cruise ship terminals in the country. As of 2023, Cairns was home to approximately 175,000 residents, making it one of Queensland's largest regional cities. Over the past 20 years, Cairns has never had a decrease in population and has experienced an annual average population growth of 1.9%. It did see much lower increases in population growth from 2019 to 2021, when COVID heavily affected tourism. Surprisingly, the population did not drop. It just grew at a slower rate before picking back up. Population is expected to grow to 241,000 residents by the year 2050. This is an increase of nearly 70,000 additional people, which is 2/3 of tropical North Queensland's entire forecasted population growth in that period. This growth will create the need for approximately 32,500 new dwellings over the next 25 to 30 years. So what's supporting this growth? Let's start with economic strength and industry drivers. Economy rebounded strongly post-COVID, with its gross regional product reaching approximately $11.46 billion in the year ending June 2023, marking 5% growth on the previous year. This represents a $1.66 billion increase in economic output since 2020. Cairns contributes roughly 2.5% of Queensland's overall economic output, underscoring its importance within the state. Employment has grown in tandem with over 88,500 jobs, which reflects an 8% rise since 2020. With economic diversification being a priority for city leaders, Cairns is well on its way to hitting its $13 billion GRP target. Healthcare and social assistance is Cairns' largest industry by employment and fiscal output, representing about 13% of the region's economic activity. Cairns Hospital is the major referral facility, serving roughly 250,000 residents across far north Queensland. Construction ranks as the second largest employer, fed by a multi-billion-dollar pipeline of projects, which we'll run through in just a moment. Tourism is a cornerstone of Cairns' economy and a major employer. In 2022-23, visitor spending was estimated at around $3.7 billion, generating roughly $1.8 billion in direct value added for the region. Retail, trade and hospitality are large employers as well, thriving on both local demand and the flow of these millions of visitors each year. Agriculture, though smaller in output compared to the services sector, remains an important industry for local supply chain and exports. The total value of agricultural production in Cairns was about $161 million in financial year 2020 and 21. Tropical fruits account for over half of output, and sugarcane represents about a quarter of production, crushing more than 1 million tonnes annually. Cattle grazing is also prominent. While agriculture contributes about 1 to 2% GRP, it provides vital diversification, supply chain jobs and export income, especially as high-value food exports are a focus of expansion in the region. Defence, aviation, maritime and logistics. Cairns is a strategic logistics hub for Northern Australia and is a major gateway to remote areas and neighbouring countries. Cairns Airport is the country's busiest regional airport, serving roughly 3.9 million passengers in the year to June 2023, with domestic routes and international connections. It can indirectly underpin up to 30,000 jobs and contribute anywhere from $1 billion to $2.5 billion in value added to the regional economy. On the marine side, the port handles bulk cargo like fuel, sugar, fertilizer, LPG, general freight, cruise ships and fishing fleets. It services communities across far far north Queensland, the Torres Strait, Papua New Guinea, and the Gulf of Carpentaria, facilitating imports and exports for the region. Additionally, the HMAS Cairns Naval Base stations up to 3,000 personnel and is currently responsible for all Australian naval activity of northeastern Australia from Rockhampton to Thursday Island. The base is currently undergoing a $155 million upgrade. Cairns boasts a thriving marine services, shipbuilding and maintenance industry, which supports over 4,500 jobs, cementing a key maintenance, repair and overhaul centre for defence, marine tourism and super yachting. Education and training is a growing contributor to its economy, driven by local institutions and international students. James Cook University maintains a significant campus, and their 2018 report showed the campus alone generated an estimated $183 million in value-added impact, supporting over 1,300 full-time jobs. International education is a key export, bringing in over $57 million in revenue in 2022 and supporting over 370 full-time equivalent jobs. Now, Cairns attracts many students from the Asia Pacific for unique programs in marine science, environmental management and hospitality, and around 1,500 international students enrolled in 2022, bolstering the region's economic diversification. Now we've covered off the economy, let's run through infrastructure, investment and development. Cairns is set to benefit from billions of dollars being invested in local infrastructure and development projects. The Queensland government committed a ton of spend in the 2024-25 budget as per the released regional action plans. It is investing a record $474.8 million to boost healthcare services across 5 key projects that will support more than 1,200 construction jobs. Hospital expansion project is expected to finish in 2026 and includes so many projects that I cannot list them all in detail here today. Upon completion, these projects come together to form the Far North Queensland Health Innovation Precinct. A jointly funded $472 million project is underway to upgrade Cairns' drinking water supply, with current population projections showing that by 2026, demand for water will exceed capacity of existing infrastructure. This is the council's largest infrastructure project ever undertaken. Separately to that, Cairns Regional Council will be spending $383 million on its capital works program in 24-25, providing over $43 million on enhancing the water network, over $32 million for improving the wastewater network, and over $18 million on water reservoir and sewerage works. Altogether, that's nearly $1 billion being spent just on water infrastructure to sustain future growth. The state government additionally has over $77 million allocated for critical infrastructure projects in 24-25, alone supporting another 500 jobs. Other joint government projects include $225 million for Stage 5 of Bruce Highway Master Plan Foster Road upgrade, with over $866 million worth of work having already been completed. We have the $359 million Stage 1 Captain Cook Highway upgrade, another $300 million for the Western duplication, and another nearly $10 million for the Navigation Drive Road link. The Australian government has also announced $50 million to deliver community infrastructure projects in Cairns and the Far North. A $16 million total spend to expand TAFE Queensland's Great Barrier Reef Marine College. Central Queensland University is building a new campus in Cairns CBD, expected to be completed ready for Term 1 in 2028. The $50 million project aims to accommodate 6,000 more students. Now, CQU have recently added an additional $27.5 million allied health wing to this planning, bringing the total project cost to almost $80 million. James Cook University has also started the construction of its Tropical Enterprise Centre. This $50 million project will stand alongside Cairns Hospital's Far North Queensland Health Innovation Precinct. $360 million has been committed for the Marine Precinct project, which importantly will still go ahead even with a massive budget blowout under the previous Labor government. More than 5,000 local jobs will be supported through this project, with many new ongoing jobs to be created in coming years. Cairns Airport's International Terminal is undergoing a $55 million redevelopment to boost tourism capacity. In July 24, a $60 million Eastern Aviation Precinct was announced that will include an array of purpose-built infrastructure and facilities, enabling key local industries, businesses and airport partners to expand. There's also nearly $1.3 billion over 7 committed private capital projects as per the State Development, Infrastructure and Planning website. And look, that's not even including 5 committed projects that are yet to release their budgets. Importantly, I'll come back to this topic in a few minutes, so hold this thought. Now, lastly, I need to show you how the Regional Council is shaping their city for the future. Cairns is getting a game-changing game-changing facelift. The vision is big, bold, and beautiful and will transform Cairns as we know it. There is so much going on here, I can only scratch the surface today. I'll quickly talk you through the 6 council master plans, starting with the City Centre Master Plan, which has key projects that respond to the reshaping of the Cairns City Centre. Some are nearing completion and others are about to commence. These include the Esplanade Dining Precinct that, when completed, will extend Cairns' tropical outdoor dining culture to create an even more inviting and vibrant experience. The Gallery Precinct will transform and connect 3 heritage-listed buildings to create a vibrant and world-class facility to host exhibitions and events, driving tourism while strengthening the local creative economy. Cairns Esplanade Parklands renewal will blend tropical landscape and waterfront views and modern amenities while distributing activity more evenly along the full length of the parklands to support a high proportion of events, activities and facilities. Project Florence Street and City Streets will strengthen connections between the CBD and the waterfront, linking the heart of the city with the Esplanade. This will involve streetscape upgrades and amenities for better walkability to draw more people into local shops, restaurants and venues. So some pretty cool stuff in there. Now we also have the $91 million upgrade of Barlow Park that will attract more events and ensure that Cairns will play its part in the Brisbane 32 Olympic and Paralympic Games. Now this has been confirmed in the confirmation of the budget for the Olympics. The Kenrick Street Master Plan now has stage 1 complete, with future proposed stages including a community centre, events space, BMX track, skate bowl and multi-sports courts. The Palm Cove Master Plan focuses on the redevelopment of Williams Esplanade and the Foreshore Tourism Precinct. This is the area's high activity centre, and as you can see, 6 project opportunities have been identified, including the Northern Activity Precinct, Play Precinct, Harper Street Node and Viva's Node, to create a truly beautiful area surrounded by public art and feature lighting. Now lastly, and probably the most interesting for everyone that is watching out there today, is the City Precinct's Urban Regeneration Project. Now this project aims to stimulate diverse and affordable infill CBD housing while making the city centre a more livable and connected place. A roadmap is being developed with precinct plans to facilitate investment and the delivery of infill, diverse housing that has improved amenity and livability within the CBD and the 3 neighbouring precincts. Now let's move on to the fun stuff. Cairns property market analysis. Now I'll include subchapters on socioeconomics, rental market trends, sales market trends, and the investment outlook. Affordability. Region's housing market remains relatively affordable compared to larger cities. The median house price in January 2025 is around $670,000, up from about $392,000 in 2015, which is roughly a 70% increase over the decade. But as you can see, most of that growth has happened in the last 5 years since 2020, when the median price was just $426,000. So between January 2020 and January 2025, 57% of that 70% growth occurred, meaning just 13% growth occurred in the 5 years 2015 to 2020, which translate to modest annual growth of approximately 2.5% to 3% per year. For much of the 2010s, Cairns saw minimal price appreciation. House values in December 2019 were only around 27% above their 2007 peak, indicating a long 12-year period of almost flat growth, annualized at about 2.25% per year. In the early 2020s, affordability began to tighten as property values accelerated. Unemployment. Kansas' job market has strengthened markedly after a slump in the mid-2010s. The unemployment rate in September 2024 was just 2.9%, near record lows for the region. This is a dramatic improvement from the highs of the previous decade, when unemployment peaked at 8% in late 2012 and again in January 2015. A combination of factors such as the end of the mining boom and slowdown in tourism had driven unemployment upwards. But from 2017 onwards, conditions gradually improved. After the COVID-19 shock in 2020, ongoing population increases and a diversification beyond tourism have positioned Cairns Cairns on a healthier economic footing. Overall, Cairns entered 2024 with one of the tightest regional labour markets in Queensland, a positive sign for both local incomes and housing demand. Rental market trends: renters versus owner-occupiers. Over 1/3 of households are renters, while about 2/3 are owner-occupiers. This proportion of renters, roughly 36%, is slightly above the Queensland average, reflecting Cairns' demographic mix, which includes a transient workforce, young professionals and students. This underscores the importance of the rental market. Rental supply and listings is extremely tight, with the number of properties advertised for rent having plummeted in recent years. Now, this has created a landlord's market. Typically, only around 600 to 700 rentals may be available in the entire Cairns region at any given time, a very low figure relative to the population. Briefly during the pandemic, some short-term rentals converted to long-term, slightly increasing supply, but that effect was very short-lived. Since the reopening of travel, an influx of workers and students has fueled further demand, and the rental market remains exceptionally tight. Overall, Cairns' rental inventory is near historic lows, creating significant pressure in the rental market, meaning choices for tenants remain very limited. Vacancy rate has fallen to record lows in the past few years, currently hovering around 0.8%. It was a much more balanced market in 2018 at around 2.5%. In earlier years, vacancy rates could even exceed 3 to 4% and hit almost 5% in 2009, but they have steadily declined as population growth outpaced the construction of new rental stock. Although the COVID-19 period initially pushed the vacancy rate slightly higher, it quickly rebounded below 1% as demand surged again. Such ultra-low vacancy rates means properties rent out almost immediately. This scarcity is expected to persist unless significant rental development occurs or demand slows substantially. Rents and yields. The rental shortage has driven rents sharply higher. Median weekly rent for a house is now roughly $570 to $630 compared to just $363 in February 2015. Now, this jump in asking rents has gross yields around 4.5% to 5% for houses, and sometimes over even 6% for units. Over the next 3 to 5 years, rents are forecasted to continue to rise as population growth and limited supply maintain pressure on the market. Sales market trends. Stock levels and time on market. Inventory is very tight, sitting at 1.14 months. Now, since mid-2021, stock became almost non-existent, consistently dipping under 1 month of supply, with houses often selling within 2 or 3 weeks of listing. Now, this eased slightly in the mid-2023s before dropping back down to 2 to 3 weeks of supply come end of 2023. Recent data shows listing volumes have risen a bit from early 2024, giving buyers slightly more choice, but by any historical standard, housing stock remains constrained. Sales volumes and market activity. Sales activity has cooled from the frenzy of 2021, but remains relatively solid. However, the dropping has been less pronounced than in many other regions, highlighting its resilience. Vendor discounting remains minimal, below 3% from mid-2023 and minimal again from 2024 onward, indicating a strong seller's market. This differs sharply from the mid-2010s when properties could linger and sellers frequently had to discount by 5 to 8%. Historical growth and current growth cycle. Over the 10 years, 2010 to 2020, house prices have grown by an average of roughly 2 to 3% per annum. This figure masks significant variations, a prolonged period of stagnation followed by a stronger surge in the early 2020s. From 2014 to 2019, capital growth was almost flat, but the pandemic era triggered double-digit annual gains, quickly boosting the median house price. Overall, Cairns has only recently made up for its lengthy mid-2010s lull, so the decade's averages still remain modest. Current growth cycle position. Most evidence leads to Cairns most likely in a mid-stage of growth, and most analysts see no evidence of a major downturn. Cairns could sustain moderate growth well into the short to medium term, with projections ranging from 5 to 8% annually depending on where you buy, assuming no major external shocks. projected growth means that an extra 32,500 dwellings must be built by 2050. The Mount Peter Southern Growth Corridor, spanning approximately 3,300 hectares south of Cairns between Edmonton and Gordon Vale, is the last remaining greenfield development area in the region. Around half of the land is suitable for development, capable of accommodating approximately 18,500 new homes for an estimated 42,500 people. A priority development area, or PDA, declaration for the Mount Peter Corridor is currently being sought. Now, this area will play a crucial role in future growth, as it is projected to account for 37% of the city's population growth between 2021 and 2046. I mean, look at the size of it compared to Brisbane. But take note, the Mount Peter Southern Growth Corridor will be newly built properties. They're all new builds. Also noting the transformations underway of the Cairns CBD and other areas, what is clear is that land scarcity will be high in established areas, especially closer to the CBD. There really won't be a lot of land available by 2050. So start your research in high growth, established areas of the region now. Remember, there is always risk associated in every market, and regional markets are no different. One small risk associated with the Cairns economy is that tourism supports a significant share of local jobs, directly and indirectly accounting for about 1 in 6 positions within the wider tropical North Queensland region. About 2.8 million visitors visited the region in the year to March 2024, with overnight visitor expenditure reaching $4.72 billion. Now, Cairns is the gateway for that tourism. Therefore, it is reliant on that sector. Now, although the economy is undergoing diversification, this current reliance makes their economy less balanced, and in the long term, it might become a concern if another pandemic occurs or some global issue halts tourist travel. The Cairns economy is diversifying and growing. Unemployment is low and housing demand remains robust. With undersupplied rentals pushing yields higher and sales listings still limited, market fundamentals appear favorable for short to medium-term gains. While economic conditions can change, Cairns currently presents an attractive balance of affordability, yield, and capital growth potential. If you want to know anything more about buying or investing into regional Queensland, just give us a call. We specialise in Queensland. It's our own backyard. Until next time, happy property navigating.